Welcome to my channel. This is Afro Swing FX. I will be doing a trade recap of several pairs that were posted on my pages. First on the list will be GBP Canadian. As always, I want to start with where this analysis was posted. This analysis was posted on my website. It was posted on September 23rd. And as you can see on my screen, we were anticipating a retracement to some level up here. So this is the daily time frame. You may not see the supply, but on the 4 hour, there is that supply. We were anticipating a retracement to this level. Thereafter, the next stop. Of course, we'll blow through these liquidities at 1.625, 1.622, targeting the next liquidity seated here, and then touching this fresh order block before completing the leg down here at 1.544. So this is around September 23rd. We were at 1.64. So presently, where are we on GBP Canadian? If I switch to the daily chart, now, you'll see we were at this level. We came down a bit. We are looking for a correction to this level. And in fact, if I adjust my demand to that level and I switch back to the 4 hour, you will understand why I am saying the market will retrace to this level of 1.665 before resuming the downward trend to 1.62, 1.622 to 1.59. So this is still an active trade. Guys who want to get in on the trade can still get in early. Allow me just to correct this. This seems to be a mistake here. If I go to the 4 hour time frame, let me see the liquidity. I can still correct it further. So this is one trade that currently I am still in this trade. And I believe there's money to be made on this trade. In fact, let us even mark a fresh order block. We are seeing a fresh order block down here. Allow me to just mark it and to correctly place the horizontal ray. So these fresh order blocks or the liquidities can be your take profit if you like. They can be your take profit if you like. So this is the chart for GBP Canadian. We are still active on this trade. And then the next in line will be Euro Canadian. So once I'm done with that, let's take Euro Canadian. So this was the chart on September 23rd. September 23rd, we were looking for a consolidation and then a break to the downside. And we were targeting a level of 1.39. There's a liquidity there. And then we're also targeting the levels of 1.3355. That is our profit target. So we are swing traders naturally. And we are looking for long trades, for trades we hold for long periods that have a lot of pips. So you can hold a trade for a month or two. You're chasing about 3,000 to 5,000 pips. So we were at this level of 1.43. We were anticipating a break of this key structure daily. So if I go back to the markets, Euro Canadian, on the daily we seem to have broken through this structure. Allow me to just delete this liquidity, trendline liquidity. We have just broken through, so we are doing a retracement. If I go to the 4 hour, that's when you'll see the proper break. This was the proper break, and we are doing a retracement. Could push higher or could retain this level. So where are we anticipating the market to head next? We are looking for the market to print new lows, and if I was to recommend, I would recommend that you wait for this low to be broken. Let me just mark it as targeted. You wait for this low to be broken. So if this low is broken, you just place your sell limit somewhere up here, and you can catch this trade at 1.43, targeting 1.33. So that's about 10,000 pips or even 9,000 pips. You could make approximately $80 on a micro lot. That's good money. So the next in line will be, so let me just close that. Next in line will be GBPNZD. So this is one of my favorite pairs. So at the time of this analysis, September 24th, we had just touched and reacted off this demand zone, and we had option one, the break, correction, and continuation, or we had a consolidation, break, then continuation. So let's see what happened in the market. Let's see what happened in the market. That is GBPNZD. GBPNZD. So what we have, this is the 4-hour chart. We have a break. Of course, we are now looking for a correction. And that correction can either end here. I think chances are it will come to this level and mitigated the level. It will come to this level before resuming the slide downwards to the 1.95 or 1.92. So my advice would be, if you want to get in on this pair, just wait for this level to be broken. Once this level is broken, once that level is broken, you can seek to place your sell limit orders during the correction and you'll be in the trade. So the next pair would be, let me see, EURNZD. Again, we had a proposal. There will be a consolidation, break, continuation. Sorry, consolidation, break, retracement, continuation. Or there was going to be a clean break, a correction, and a continuation targeting 1.67. And this analysis was posted on September 24th, 2023. So this was the last week of September. So if I come here, we have EURNZD, and we had made two proposals: a clean break, retracement, then continuation, or a consolidation. So right now, consolidation never happened. So let me delete that. So since we had a clean break, and the market is now resting on this zone. In fact, if I am to mark it correctly, allow me to pick this outer demand seated here. There's an outer demand. This is the swing structure. Allow me to just mark it correctly. So this is the swing structure. And you're seeing, let me delete the other one. Oh, sorry. So you're seeing the market has reacted off this region. And what is likely to happen? Allow me to also mark another demand that is seated up here. Demand. So what is likely to happen is, in the coming days, we are likely to see a correction. A correction to this level. Let me just delete that. We are likely to see this kind of move. A correction, a reaction, maybe a consolidation, a break, a retest, then of course continuation. Ladies and gentlemen, if you look closely, allow me to just show you something. If you look closely, this is a swing structure starting here. This circle represents a swing structure starting here, and they are looking to break this swing structure. The market is giving indications that it wants to break this low, and also break this low, maybe do a retracement and then continue downward. So we are likely to see a lot of movement this coming week from this zone. So this is something you can still trade. My advice would be, wait for a break of this region, maybe catch a retest, then come downwards. So if you catch it at 7.6 and exit at 7.4, you have your 2,000 pips. That's approximately $15 for GB, so for EURNZD. Sorry. The next pair would be AUDNZD. So September 24th again, we posted this work, and I remember posting this on TradingView. TradingView. Allow me to just take you to that piece of work that was posted on TradingView. So this is it. Just give it time to load. So we were talking about, we have a combination of a major and minor consolidation. The orange line is the orange line is the minor, the purple line is the major, and we have a bearish trend. So, ladies and gentlemen, the purple line is the major consolidation, but the orange line is a minor consolidation. So the orange line is in the middle of a major consolidation, and you're expecting it to come to this level of 1.0670, if not break and come even lower. So let's see what happened between September 24th and September 30th. Exactly as predicted, it came back to this level. Now, I am not saying it will react and go upwards. I have no idea. But if it decides to break, of which I think it will break, it will come back, and let me just go with the chart instead. Here we are. I think in the coming weeks or days, we are likely to see this segment be replayed. In fact, let me just draw it for you. We are likely to see a break. Okay, we are likely to see a retest, and after retest, we are likely to see a continuation, either to this region or this region. So that is what is likely to happen in the coming days. So AUDNZD is an active trade, and by now you've noted cross NZD pairs are largely bearish. So let's wait and see what happens. A break of this level, we will get in and buy. Sorry, and sell. The next pair would be silver. So this is a relatively old setup, old setup. It was posted on September 4th, beginning of September, and we were looking at a break of the 24 region, a retracement to this region, then a continuation. So the key level is 24, targeting 23, 22, if not sub 22 levels. So if I go back to the charts, let's see what happened. We're looking at silver. Good. So this was the level that we were targeting. The break of 24, it broke, but never retraced, never corrected. So it continued downwards, a clean break. Broke through this level again, did a minor correction targeting the supply, then continued. So if you look at this chart, we were targeting the 22 or sub 22 levels. It was taken out. So those levels were clearly taken out. So if you took this trade, I think you made bank. You made some good money. I don't know whether I posted this work. Let me just check whether I posted on my TradingView account. If I did, it would be amazing to see how it played out. Um, Unfortunately, it doesn't look like I posted it. What I posted was it gold? No, this one is oh no, this posted. Let me just see. This was July, so this one is not necessarily active. This is not active. So for silver, so if you got in on this, you got in this trade, you made some good bank. Where are we presently? We are settling in this demand zone. And allow me to zoom out and show you something. So this is a bearish leg. We look like we are in a consolidation, ladies and gentlemen. We look like in a consolidation, and we have come to this demand again. I can almost promise you we are going to experience a break to the 21 levels, if not the 19 levels. And I'm seeing it's like we had a trend line liquidity. Now I need to just check it. Trend line liquidity. In fact, this is beautiful. This will now tell us where the market will retrace coming in these coming weeks. So we are still bullish on the dollar. I know if you check market sentiments, guys are bearish on the dollar, but I'll be honest with you, I don't think the dollar is bearish. It will be bearish possibly towards the end of the calendar year. Chances are. So you're seeing this trend line liquidity has been taken out. So there's a liquidity grab. We are likely to see a minor retracement, maybe to this level of 23 or this level of 22 before a continuation. So let me just mark it correctly. Let me not delete that. One thing I can promise you, I think this week we'll see this kind of a correction. And what guarantees me we'll have this kind of correction is because we have NFP, non-farm payrolls, coming out on Friday. And if they happen to hit or miss, irrespective of what happens, I think we'll see a reaction to this level. So you could see beginning of the week, the market could consolidate, maybe NFP hits, it goes down. Or the market could break down even further, NFP misses, consolidation, then continuation. Either way, I am bearish on this pair. The next pair would be, allow me to take you to EURUSD. So this was posted on August 21st. We had settled around this demand level of 1.085, and we had a reaction that suggested you might come back to mitigate at 1.09. But let us see what happened. We were targeting the 1.063, okay, 1.063. That's what we were targeting. Now let's see what happened in the markets. EURUSD. Good. Remember, 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 we were targeting, I don't know if I can put these two charts together. So we were at demand, we were sitting near a demand of 1.085. Let me just mark it. So this was the demand. I don't know if it looks similar. So let's see. Let's see whether it's the same demand. Yep. It's the same demand. We are targeting to break 1.085. 1.085. That is what we were targeting to break. And you see, we broke. We broke this level. And the market came back to, okay, this was a fresh order block. Fresh order block. At 1.093. This is what was. So this fresh order block corresponds to this fresh order block, 1.09896. 1.09896, somewhere around here or here. Or is it here? Anyway, it's somewhere here. Let me just come back. Let's look for it. So it's 1.098 below the unmitigated. It's up here. Sorry, it's up here. So, ladies and gentlemen, one of the reasons why the market never came back to this level, this was the conservative entry level, this was the aggressive entry level, but this was the high probability level. This is the swing structure. This is the swing structure that created this low. So the market came back to mitigate that swing structure before going downwards. So that's why it never came back to this level, to these levels of 1.098. And I think the 1.098 levels are going to be hit in the future. So right now for EURUSD, we are waiting for a clean break to the downside, and I think we'll experience it this week. Where are we targeting this market to go next? There's a fair value gap, there's an imbalance here, there's a fresh order block. So we are extremely bearish on EURUSD and bullish on the dollar. Thank you for your attention. Thank you for your time. I request that you like and subscribe to my channel. Leave a comment in my videos. Let us grow together. Thank you very much.